And welcome, it's Mary Ellen McGonagle with your weekly Edge show for Friday, March 8th. Today, as usual, we're going to take a look at those markets and see where we close the week. We had a bit of a slight pullback. And then beyond, take a look at some of the sector rotation that is continuing to shape up. Looking also at some of the news that drove the markets last week. And then last up, viewer question of the week. And this question is all about how to use longer term chart displays to inform you in not only your entry point, but also your time horizon for the trade. So let's go ahead and take a look at those headline news. First up, as mentioned, the markets did have a pullback and they do remain in an uptrend. We'll get into that. Also of note, last week, Fed Chair Powell did testify in front of Congress. A lot of people on edge regarding his remarks, but at the end, they were very much in line with earlier comments, and that is that the Fed is not yet ready to cut interest rates. They don't have enough by way of seeing inflation deteriorate or decline. So net, not a big surprise, but no new news. Also, we did get employment data, and that's always closely watched by the Federal Reserve. They're on the lookout for a slowdown in employment to keep the economy at least steady, but not growing. So we did see more new jobs than expected were created. However, unemployment levels increased, and also closely watched our wage pressures, and wages remained flat. So in the end, a rather benign report relative to that. Now, we do have some inflation data due up next week, and that's going to be core CPI and PPI data that's going to be closely watched. Interest rates are very important to the broader markets, and investors, of course, we want that confidence that the Fed will begin cutting rates sometime soon. Also, retail sales data is due next week, and we'll see how that aligns with some of the data we've been getting relative to earnings for some of these bigger retailers. So let's go ahead from here and take a look. Where did the markets close for the week? And here we are. This is a daily price chart of the S&P 500. And you can see that we bounced around a bit this week, ended down about 0.2%. However, we are still above this 10-day simple moving average. Good news there. The RSI and MACD momentum indicators both in positive territory. So as mentioned, the S&P does remain in an uptrend. Let's go ahead from here and take a look at the equal weighted S&P 500. This index gives each of the components in the S&P equal weighting as cited, and we can see that it is in a nice uptrend. The equal weighted S&P was up 1% last week, and that's good news. That indicates that we are seeing a broadening out of participation beyond those heavyweight Magnificent Seven names that have been dominating the price action of the broader S&P 500. We'll get into where that broadening out is taking place at this time. First up, we'll take a look at the 11 underlying sectors in the S&P 500, and it's a 2-month daily price chart view. These sectors are sorted by RSI, and the purpose here is to present up on this upper left quartile some of those stronger sectors relative to the S&P 500, which is sitting here. And then the lower right quartile is your weaker areas. And it's not whippy. The moves in these sectors tend to progress at a level where you can spot rotation. But let's take a look at these weaker areas and front and center. It's growth stocks. We have XLC, communication services, XLK is technology, XLY, consumer discretionary. So growth stocks certainly took a back seat to some of these more defensive areas. Up here at the forefront, XLF is financials, and I'll share with you what is driving the move this past week into those financials. The group overall was up 0.8% relative to the S&P, up 0.2%. But let's take a look at industrials. They continue to power to new highs. Nice uptrend shaping up there. Lots of movement, and it's relative to strong earnings among names in that industry group. And then as we progress, we can see REIT stocks beginning to perk up, forming the right side of a base, poised to break out of this nice 2-month base breakout. We can also see the MACD trending upward in positive territory, so interesting move there. Also up at the forefront, utilities waking up. XLU, 3.3% gainer, top performer last week, and also positive momentum. Now, both of these sectors do not make up a big part of the market, but it is noted that we are seeing price upside movement in these more beaten down areas, as these areas that have been up at the forefront are either trending sideways or coming under distribution. Let's take a look at XLY, the worst performer, down 2.6%, with that momentum poised to turn negative. Now, of course, Tesla was down 13.5% last week, and that did not help the group, but there were some names that were rallying, and I'll share them when we take a look at that longer term chart view. Now from here, let's take a look beneath the surface beyond those sectors at some of these sub-industry groupings. I use selective ETFs to really get fine-tuned as to where those money flows are shaping up. Again, that RSI sorting this group by strength to weakness, and up at the forefront, home builders remain quite strong, up a little bit more than the broader markets, but that uptrend still very much in place. We'll take a look at interest rates, which impact this group because of mortgage rates, of course. And let's go ahead and do that right now with the yield on that 10-year hovering at about 4.1%, but we can see net that yields and interest rates are continuing to decline, which is good news for the broader markets. Also, taking a look at these sub-industry groupings, we can see semiconductors, one of the harder hit areas today, down 4% after Broadcom came in with sales that were below estimates. But in the end, the group remains in a confirmed uptrend, and certainly we're in an overbought pullback. And also taking a look at the sub-industry groups, I mentioned financials at the forefront and all about bank stocks, which were up 4% last week, and they're beginning to exhibit some nice positive characteristics. We're getting this MACD close to entering into positive territory, but not a lot of momentum. Volume fairly light there, but it is a newer area as far as participating in the uptrend in the broader markets. Another area that I did want to share with you are small caps. They were up 0.2%, but continuing in a nice uptrend. And this is what we want to see as far as that broadening out beyond those magnificent 7 names. And I talked about consumer discretionaries deteriorating last week, worst performing group. Here's XRT, the S&P Retail ETF, and you can see that it has pulled back. We do have that black line down through the red MACD crossover, and would not be concerned unless we saw that RSI turning negative as well. From here, let's go ahead and take a look at some of those larger cap names. I talked about earnings being a big driver of some of the names in the retail space last week. So from here, we are going to go ahead and take a look at 3 larger names that recently reported. Now, first up is Costco. They did come out with their numbers today, and the stock stumbled in response. This is a daily chart of the Costco. You can see it was down 7.6%. We now have a negative RSI. We do have a negative MACD crossover and super high volume indicating distribution. So near term, the stock is poised for further downside, but let's go ahead and drill out. I talked about using a longer term chart to guide your decision making, and here we are with a monthly chart of Costco. What I wanted to point out to you is that on the monthly chart, the stock was overbought going into that earnings report. We had a significant move from this 500 level up to 725. and the MACD up in the upper reaches of its trading range. So any kind of pullback or at least pause at this point would not be unexpected. From here, let's take a look at Walmart. Reported 2 weeks ago. We can see this nice gap up in response, a pullback to the 10-day, and the stock remains in a nice uptrend. From here, we're going to drill down and take a look at that monthly chart. And what you'll see is more of an intermediate stage. The stock is not quite yet overbought, which would be that RSI up here above 70, and that MACD still has more room to go higher. So on the monthly chart, of course, that will be your longer term view. So further near term upside here with Walmart. Last up, we're going to take a look at Target. They reported their earnings earlier this week, and take a look. Gap up in response, and really a mild pullback. We have not filled this gap, which is very good news. We're going to go ahead out to that monthly chart with this stock as well, and you'll see that we are very much in the early stages of a downtrend reversal. MACD black line up through the red. We would like to get up above that net neutral, but let's take a look. The RSI just entering positive territory. So Target very much, certainly compared to Costco and Walmart, has much further longer term upside. I'm going to leave it there. Everyone have a fantastic weekend. I'll see you here next Friday.